The European Central Bank's third quarter rate hike this year. It did announce a 75 basis points hike, which now takes the deposit rate to 1.5%, which is the highest level that we've seen since 2009. This is bang in line with what was expected as well. In a statement, they also said that it expects to raise interest rates further to ensure the timely return of inflation to the medium-term target of 2%. So let's listen in to what ECB President Christine Lagarde had to say.
We took today's decision and expect to raise interest rates further to ensure the timely return of inflation to our 2% medium-term inflation target following our meeting-by-meeting approach. Inflation remains far too high and will stay above our target for an extended period. Our monetary policy is aimed at reducing support for demand and guarding against the risk of a persistent upward shift in inflation expectations.
All right, that is the ECB president talking about the inflation concern and what the central bank is likely to do with that in mind. But with that, let's move on and take you through all of the cues that you should track as we get into a brand new trading session. We have our research team joining in with the trade setup and all of the individual stocks that could be in the news today. Sonal, Vahishta and Nigel all join me now. Hi guys, a very good morning to all of you. And Sonal, coming across to you first, take us through all of the market cues that we need to watch out for. Of course, we have been discussing the global setup as well.
Oh yes, we have been. And for our own markets, it's of course November series that starts today. Of course, I'll discuss that in greater detail. As far as the global markets are concerned, mixed cues from the US markets, gains largely led by Dow or Jones. But if we talk about what happened with individual names, Apple was the one which beat street estimates. On the other hand, Amazon saw a big miss, and after trading hours, it was down around 13%. Interesting developments on the Twitter front as well, because now Bloomberg is suggesting that Twitter will be removed from MSCI Global Index with effect from 1st of November. And that is because Elon Musk has closed the deal to take Twitter private for $44 billion. These are just reports as of now. So this will be interesting to watch out for. In terms of what the Asian markets are doing today, we have the Bank of Japan rate decision today, expected to largely remain unchanged. That is the rate of interest this time around. But we are getting largely negative cues from the Asian markets. We have Hang Seng and Taiwanese index both down around 0.3%. However, if we look at the SGX Nifty, that one is indicating that the start for our own markets for the new series could be in the green, up around 60-odd points. As far as European markets are concerned, we were just discussing that ECB has announced a 75 basis points interest rate hike. Apart from that, in the European markets, we saw Credit Suisse that was down 18% after announcing a huge loss in the third quarter. Now about our own markets. November series has started. In the October series, Nifty was up 919 points. Yesterday, we saw Nifty making an intraday low in the last hour, and in the last half hour itself, we saw swift recovery for Nifty to close in the green. Weakness was seen in the IT index yesterday. That was something that was dragging most of the constituents down. In terms of what the FIIs have done, they have net sold 6,236 crores so far this month itself, while DIIs have net bought 10,997 crore rupees. Now the support is between 17,500 to 17,600, resistance at 17,800 to 17,900, and above that, next level to watch out for will be the recent high that we saw, that is 18,096. So the setup looks in favor of the bulls, at least for today.
All right, set up in favor of the bulls. The SGX Nifty is also indicating that we will get a start around 50 points higher. So let's see how we move from there. With that, let's move on and also talk about the individual stocks that you should be tracking in today's trading session. And Vahishta has that entire list. Good morning, Vahishta.
Good morning, Pavitra. The first is Aditya Birla Sun Life AMC. While the revenues from operations were down 6% on a year-on-year basis, there has been a jump in the consolidated profit of approximately 11%. The quarterly average assets under management were marginally up to 2.93 lakh crores. Moving on to Tata Chemicals, for Q2 of FY23, the revenues were in line with estimates, which grew by 40% on a year-on-year basis. But the EBITDA was up to 84%, which came in at 920 crores, which was lower than the estimates. The operating profit margins were also lower at 21.7 versus the estimated 24.2%. Moving on to SBI Cards, the revolver rate has declined from 45% in Q1 of FY21 all the way to 24% in the past quarter of Q2 of FY23. The NIMs have also been the lowest ever for the company as the revolver rate continues to decline. The market share is also low at 19.1%. For Dhanuka Agritech, the company will be considering a share buyback through the tender route on the 1st of November, which is on coming Tuesday. For Vedanta, the company received the government's approval for the extension of PSC for the Rajasthan gas facility under the pre-NELP extension policy. And the last stock is Infibeam Avenues, which has received RBI's approval for payment aggregator license.
All right, Vaishta, thanks a lot for that entire list. Some big Nifty earnings also expected today, so watch out for Maruti as well as Dr. Reddy's from the Nifty pack. But with that, let's move on and talk about the F&O cues that we should track. And Nigel has all of those for us. Nigel, the start of a new series.
Well, that's right. Start of a new series where you're going to be opening around that 17,800 mark, which in the last few days has been a bit of a hurdle. You know, if you pull up the highs of the last few days, that will clearly state it. You just pull up the intraday chart of the Nifty actually yesterday. You know, bulk of that green that we saw yesterday was because expiry played out. At around 3 p.m., we were down, we were around that 17,700 odd mark. But towards the end, we did see a bit of a spike up. Also, that was part of expiry that will play out, which could possibly, get reversed at some part of the day. Now, at the start of the series, well, the FIs, they're net long this time around. Remember the start of the October series, they were net short. And evidence suggests that when the FIs are net short, it's not such a bad thing. Just take a look at what happened at the start of October. They were net short on the index and we had a good rally. Even if you look at another data point in July, they were net short. They had only around 15% of their positions on the short side, and you had a good series in there as well. So being net short, the FIs being net short actually gives you a bit of a bounce. Let's see how it plays out. You could argue that in the month of August, well, they were net long on the index and then we had a 3.5% gain. So it'll be interesting to see how November does play out. But 17,800 to around 18,000, that's a bit of a congestion zone. The reason I say is because more than 40 lakh shares were added at both these two strikes. And that's telling you the bears, well, they want to defend this upper level. Support, though, is at around 17,500 to around 17,600. A couple of reasons out there. There was writing seen at around the 17,700 put in trade yesterday. And also the 50 DMA comes in at around that 17,500 odd mark. So the uptrend will continue as long as we hold on to the 50 DMA. But I'm expecting yet again some bit of congestion at around that 17,800, 17,850 odd mark. Back to you.
All right, let's see how that moves and how the trading session really pans out. Nigel, Vaishta, as well as Sonal, thank you all very much for joining us and taking us through the trade setup this morning. With that,